And as Bob just mentioned, shares of Boeing fell today. The stock was down almost 3%, in part because of profit taking after its big run up. The drop came despite a strong quarter that saw plane deliveries hit a record and upbeat profit and cash flow outlooks as well. LeBeau tells us why Boeing's business is expected to soar.
To understand why shares of Boeing have risen almost 100% in the last year, look at the company's commercial airplane business, starting with its signature wide-body, the Dreamliner. Not only is Boeing making more money on each 787 it sells, but it's also ramping up production. That's because demand for commercial airplanes is not slowing down. In short, more people around the world are getting on planes.
Airlines continue to report solid profits, and passenger traffic growth continues to outpace GDP, with traffic growth of 8% through August. Also, cargo traffic is experiencing a healthy recovery, with 10% freight traffic growth over the first 8 months of the year.
As airlines clamor for newer, more fuel-efficient planes, Boeing may raise production plans for its most popular model, the 737. In a couple of years, Boeing is scheduled to crank out almost 2 new 737s every single day. On the defense side of the business, Boeing is wrestling with higher costs for the new Air Force refueling tankers. But the first planes are still on schedule to be delivered next year. Overall, Boeing's defense business remains strong, giving the Dow component a solid balance sheet as it heads into the end of the year. LeBeau, Nightly Business Report, Chicago.